Welcome to another episode of Healthy, Wealthy, and Wise Retirement Podcast, where certified financial planner Lauren Sherman shares thoughts on having a healthy mind, body, and spirit, an abundance of wealth inside portfolios and out, and lessons learned from clients and mentors over the years.
Welcome in for another Healthy, Wealthy, and Wise Retirement. And as always, I'm your host, Lauren Sherman. And today we have a special guest joining the show as Isaiah Douglas of Swan Bitcoin is here to discuss, well, all things Bitcoin. So Isaiah, welcome in and thank you for joining us for this conversation.
Absolutely. Delighted to be here. A ton of fun. Always enjoyable to chat Bitcoin on a podcast.
Yeah. And I know I mentioned this before we hit record, but Bitcoin is definitely one of the most requested episode topics for us to cover. And I hadn't covered it in the past. So a lot of people are, I imagine, going to listen to this because it's been something that they've been kind of knocking at the door for a while to hear about. I'm excited to see where the conversation goes because we could go in a lot of different directions, but I just showed you, I did print off a list of all of our audience questions. So we have a lot to cover. Maybe before we jump in, I know you don't like to share too much background stuff, so we'll kind of get into the meat and potatoes of this, but if you want to just share really quick your background, because you used to be an advisor yourself. So I find that perspective kind of interesting.
Yeah, agreed. I want to get to people's questions because I think that's probably more exciting than listening to kind of my background. But yeah, so for me, I was a financial advisor, started my career at Merrill Lynch in 2015, did that for 3 years, then left and launched my own registered investment advisory practice, similar to what you're doing, got my CFP, went through kind of that career trajectory. I never would have thought I would have left that at the time, but merged with a business partner in 2020. We grew that business. It ended up being something where we had up to, our team grew to 10 people. It was basically not the right relationship is the way that I would put it. It wasn't the right business partnership. There were some issues that were there. At some point you have to make a decision to either go forward or, go through that kind of business divorce per se. And so we did that in the summer of 2023. Thankfully, things worked out in a way I think that was best, hopefully for all parties. A lot of people on the team that are still there, some that have left that I respect, awesome work that they did. But yeah, the Bitcoin story for me really started at Merrill in the 2017 run up when Bitcoin kind of went from sub 1,000 up to 20,000. Heard a lot of people talk about, hey, should I buy this thing? Hey, I want to buy this thing, and calling in and asking questions. And I worked on a bigger team, and our kind of orders from up high was basically, it's a scam, it's tulips, don't buy it, don't touch it, you're gonna lose all your money. And it kept running and people kept talking. And then when it went from 20 back down to call it, 2 or 3,000, we told them, hey, look, see, we saved you all this money, we're right, you shouldn't touch this, that's bad. I came back to it because Bitcoin corrected 70 some percent, but it didn't die. And I was told it was worthless, and it just hung around $2,000 or $3,000. And I revisited that when I left in 2019 through some relationships. It really, Twitter honestly helped me rediscover Bitcoin a little bit. And off to the races. I read the Bitcoin Standard in 2019 and it really changed a lot for me. So work at Swan Bitcoin now. Love it. Get to talk about Bitcoin all day, every day to people all over the globe and do fun things like this.
Sure. Well, and to some of our listeners, this might be an obvious question, but at the same time, I think it's helpful to start at the basics. So some of our audience might not even really know. They've heard the term Bitcoin plenty, but as its kind of most basic definition, what exactly is Bitcoin? If someone asked you that question.
I think it's a great question. And the way that I try to explain it is there's a lot of stuff when it comes to the world of like cryptocurrency, and Bitcoin is a cryptocurrency, right? But a lot of crypto is not Bitcoin. Bitcoin is uniquely, distinctly different. And it was created by a pseudonymous founder, he, she, they, them, group of people don't necessarily know. I think the immaculate conception of Bitcoin is important. It's a feature, not a bug. A lot of people want to know who it is. I'd much rather not know. That's good. Right. I think it's healthy for the environment. Bitcoin started in 2009. There's a limited supply, 21 million Bitcoin that'll ever be in existence. There was a defined issuance schedule, so everyone can know exactly how Bitcoin is going to come out onto the market. There's only one way to create Bitcoin, which is through Bitcoin mining. So basically this idea of taking the specialized today machine, input is power, it creates these transactions, your reward is paid in Bitcoin. So that's how new Bitcoin comes into the market. And if I had to describe what Bitcoin is Bitcoin is, a digital asset. It is money, and it is something that is going through the monetization process, which we can talk about, like, what does that process look like?
Sure.
And what it does is it disintermediates this need for a trusted third party. I can send value to anyone in the world at any point in time, and no one can stop that. And if we think about one half of all transactions in the world deal with money, right? So there's someone exchanging value or services or time. And I joked before we
Sure.
jumped on, there's someone downstairs, doing some work at our house and it's a little loud. I don't think people
No,
will
I
hear
think
it.
you might hear it on your end. I don't hear
Yeah,
it much on my
but
end.
again, he is doing something for us, right? They're doing a service and we're going to pay him. So there's a transaction there with one half of that is money, right? They're not going to show up just because,
Oh,
hey, I'm a good
sure.
friend, I'm going to do all this work. They want to get paid for the time and effort that they have. So the idea of what Bitcoin is and how big I think the impact of Bitcoin is to kind of keep people entertained and say, hey, I think the juice is worth the squeeze to learn this. If one half of every transaction is money and you can upgrade the money to improve it,
Mm-hmm.
that market of people that are interested in that is every single human being in existence today and into the future. There's no product that is more universally accepted than money. And so that's what Bitcoin
Yeah.
is. I think where we're at today is maybe not using it as money in the US at least, which we can get
Right.
into. But the way I would describe it is money that is not controlled by a nation state, and it is selected by the free market, and it allows people to interact without someone else to control that.
Yeah. And a finite amount that's issued too, I think is important. We'll maybe circle back to that a little bit more,
Yeah.
but they can't just print more of it and devalue the benefit or the value of it, I guess.
Correct. And it's one of those things where, what does Bitcoin solve? A lot of times people ask, well, it solves inflation, which people, I think inflation is now back in the
Yeah.
lexicon. People know what inflation is, and financial access. We're very blessed and fortunate to live in the greatest country in the United States, or in the world, right? In the United States. But a lot of humanity does not live in the United States, right? And we're a little bit spoiled from that standpoint. And, I thank my lucky stars. I thank God that I was born in the United States, but it allows anyone anywhere to opt in and store value. So if they go create value, they spend less than they make, they can store value in this asset to then consume stuff in the future, which is exactly what savings is supposed to be. So, you're free from any bank saying, you know what, you're in XYZ country. XYZ country is not nice. We don't like them. So you're cut off from the rest of the world.
Right.
That person might be a really good human being that's done nothing wrong, but they just were born in the wrong spot. And that's tricky and hard to think about, where for a lot of people, they think of, XYZ country is bad, but that doesn't mean all the people there are bad. And so,
Right.
governments and banks and different people will make rules and regs based on, nation states and a lot of times what they do. But I think Bitcoin just says, hey, here's the rule set. Everyone doesn't need to trust each other. It's very honest, open, transparent. You can opt in, you can opt out, but these are the rule sets, and go do what you're supposed to do. Go create value for the world, and away we go. So
Yeah. And you've kind of maybe already answered this, but one of the follow-up questions to that a listener asked was, why has Bitcoin become so popular? If you had to put your finger on one thing, maybe you already covered it. Is there something that really stands out to you?
I think why has Bitcoin become so popular? I think it's going through the monetization process, and we've never seen an asset actually become money in the existence of everyone that's living today, right? We weren't around when gold became money, right? And so as something goes through this process, it reprices every other asset in the world. So biggest store of value today is real estate. Well, if I have owned Bitcoin for, 4+ years, 5+ years, 10 years, right? Real estate's gotten 80, 90% cheaper in Bitcoin terms. Like it's repricing all this stuff. So if I'm an individual and I'm going to rationally make a decision on where do I want to store my value, if I can hold an asset that allows life to get cheaper, whether I want to buy steak, whether I want to buy a house, whether I buy a car, pay for kids' education, healthcare, whatever, it's going down in Bitcoin terms. And I think as more people learn and are educated about Bitcoin, which is a big thing we do at Swan, they understand this is better money. I can upgrade this. It's not hard. It takes time. It takes effort to learn, but life gets cheaper. And I think that is the main thing. In other words, you could say people FOMO into Bitcoin, right? They want to come in because
Right.
number go up and I'm going to get rich and I'm going to do all this stuff. And over time, I think they learn a lot more about the asset itself and kind of what it can do. And it changes the dynamics of the way that they make, economic decisions. And so I would say the reason that Bitcoin is getting so popular is more and more people are saying this is a legitimate asset versus laughing in their face talking about Bitcoin if it was, 2015, 2014, like, oh, you're serious, like you actually own Bitcoin. Haha, that's funny. Where today it's like, oh, that Bitcoin thing, as we're recording, is making an all-time high. It's almost $100,000 of Bitcoin. And maybe by the time someone's listening to this, it's already over $100,000.
Sure.
I don't know. But you've seen that trajectory of saying this asset over the last, 14, 15 years has been the best thing to own. Okay, I want some of that. And I think that's human nature and a little bit of the herd that will then continue to say the properties of Bitcoin make sense to them. So it's a little tricky. I think everyone's going to have their own rationale, but I think ultimately it is all humans are inherently greedy, selfish in a way. And we try to squash that. You want to be a good person and not, but they're going to say this thing provides benefits to me. I want that thing because I can acquire more goods and services with it.
Yeah. When you said the price, north of 90,000, it made me think of, wasn't the first purchase ever of Bitcoin used to buy like a pizza?
Yeah, it was.
I don't know how many Bitcoins that was, but it was probably a pretty expensive pizza.
Yeah. It's a ridiculous amount of if you think about it in today's kind of exchange rate, and that's where people will talk about like, well, that's why you don't ever spend your Bitcoin. I would kind of argue and push back a little bit on that. It was so early for that specific individual that they had so much Bitcoin. I think they kind of wanted to do it to a historical moment. And then B, it's something that's going to be forever remembered. They could go out and buy that Bitcoin back at the same time if they had any dollars, right? So they could say, oh, well, it was really, call it $30 in USD. Well, they could go take the other $30 they have at the bank, and they probably had a lot more, and repurchase all that Bitcoin. So it doesn't mean that they never repurchased the Bitcoin. They just used that Bitcoin at that moment. So
if they didn't, it would have been a multi-million-dollar piece of pizza, slice of pizza.
I'll look it up. Pizza,
quite a bit.
Yeah, it was a ton. So it was basically 10,000 Bitcoin, which is today's price, $930 million.
Right.
But it was in 2010. So Bitcoin had been around for just over a year.
Yeah.
So, and it was a Papa John's, which to me is wild that they actually took it, but it was in Florida.
Yeah, that's interesting.
Yep. You ever spent $900 million on pizza?
Yeah, no, I don't think so. One thing you mentioned that we didn't expand on yet, I think you said something about crypto or other coins. I think sometimes Bitcoin gets tossed into this basket of crypto generically. And some people see these coins just have massive fluctuations or they come and go. What's your thoughts on that? How do you view crypto versus Bitcoin?
Yep, it's a great question. I think broader crypto to me is a gambling mechanism, or like VC investing, where it's a lot of zeros and maybe you strike it rich. Bitcoin is, like I said, it is basically global digital money. It is the money for the internet. Think about it that way, right? It's the upgrade of money. And so if you compare any crypto project to Bitcoin, and you just put it in the kind of like the T chart, right? The pros and the cons, right? What's the pros of Bitcoin when it comes to money? Hey, a lot of checks, a lot of good things. Crypto, there's a lot of flaws in that. And not to go like too detailed and too into the weeds, but one of the big things is this idea of, with Bitcoin, it takes work to generate new Bitcoin. So there's this idea of proof of work. So the way that new Bitcoin is issued come from the mining process. So you have to take physical, real world resources. So that energy, so it's coming from oil or natural gas or nuclear or wind or solar, like someone has to expend resources to create that energy, and then you are then using that to mine Bitcoin. So there's a cost associated with it.
Right.
A lot of crypto, most crypto is proof of stake, which means if you own 1,000 and I own 1, your stake gives you more say into that system and that ecosystem of changes and protocol changes. Where Bitcoin proof of work, if you own 1,000 and I own 1, you don't get more say. So we joked about Michael Saylor. We're talking about him before we jumped on. He's the CEO of MicroStrategy. They own a ton of Bitcoin, like 250,000 at this point. Bitcoin, they don't control Bitcoin, right? You can own a lot of Bitcoin, but you don't have control over the way that Bitcoin operates or upgrades to Bitcoin or changes to Bitcoin. Bitcoin is hard to change. And that's, again, a feature, not a bug. And most crypto is pretty easy to change. And it is derived from who has the most stake. It's usually funded from VC. It has a marketing team, a CEO, and a team that's building this project. They're going to put healthcare on the blockchain, or they're going to put, real estate on the blockchain. They're going to tokenize securities. They're going to do this or that. The main thing that crypto has successfully done is taken dollars and put them in a cryptocurrency to export them to the world. That is the biggest use case of any crypto project. If you look at the top non-Bitcoin crypto related things, it's usually dollar denominated stuff. Stable coins is the kind of the term for those. And so you can talk about all that. You say, hey, Isaiah, just boil it down to me and make it make sense. If you measure most cryptocurrency in Bitcoin terms, they all go up and then they go down to the right and they end up having next to no value. And so there was a study that actually the Swan team did, and it's a little dated, but it's going to be directionally correct, where if you looked at 8,000 altcoins since 2016, 41 out of 8,000 outperformed Bitcoin with the performance, but that's trying to find about half of 1%. So if you're really good and you know something, maybe you'll find the half of 1%. But basically 2,600 of them underperformed, and you basically lost all your Bitcoin if you measure in Bitcoin terms. So it's like, I like the kind of keep it simple, stupid strategy there. It's like, okay, if this thing actually has a use case, it makes sense. It's actually decentralized. You see adoption happening, and like all these things, it's Bitcoin, Bitcoin, Bitcoin. Why do I need to go and speculate, especially with Bitcoin's price performance and the accruing of the purchasing power? If you just buy it, hold it, you don't need all the gambling and all the things with crypto to even really do well. Like from that standpoint, like just own Bitcoin, hold it, save into it as an asset, and you'll do fantastic. You don't need to trade XYZ coin for ABC coin and, exit to make a bunch of money.
Right. Yeah, that makes sense. So I've heard you list off a few, and let me know if I miss any, but maybe they're worth just expanding on each one just slightly, because if you were looking at the characteristics of maybe like quote unquote the ideal currency, I think you have a list of durable, divisible, fungible, portable, verifiable, and scarce, and then also a track record, which is maybe where Bitcoin, you could argue, has or doesn't have yet. Is it worth maybe kind of explaining really briefly on each one of those, what you mean by those?
Yeah. So there's good paper put out by Fidelity, which I think most people listening, they're going to know Fidelity. Fidelity's been in Bitcoin since 2014. They've mined Bitcoin for a long time. They have one of the most successful Bitcoin ETFs. They do their own custody internally. Like Fidelity's been a big Bitcoin proponent for a while. And, they have a really good paper called Bitcoin First that kind of walks through all this. I would encourage you can put it in the show notes or have people find it, but it's a really good read. It's not, what I joke, like propaganda from someone that thinks Bitcoin's the greatest thing since sliced bread. Like Fidelity has, I think, a really good worldview of a lot of different things, and they try to be very forward thinking, and they make the same claim, right? It's Bitcoin, not crypto. And they say it in a nice way. Maybe I'm going to be a little bit more gruff and say, hey, it's all garbage, don't touch it. And they're going to like articulate it in a way that I think they do a really good job. But yeah, the idea with Bitcoin being able to be, scarce, I think the 21 million kind of addressed that. When you think about durable, it's something that it can sustain into the future, right? It's not something that's going to fade away. Like back in time, salt could have been something that was used as a currency, right? Well, maybe it's not going to work great. Portable, it's easy to send it from one point to another. Gold is kind of hard to send to my friends in Europe. Like, how do I get it there? Do I get a Brinks truck? Do I pay them to get on a boat? Like, how do I get it there? Divisible. So this is one that I think I had someone at a recent event tell me that Bitcoin has 21 million, but Bitcoin is then made up of Satoshis or sats, which are, a fraction of Bitcoin. He said that doesn't make it still scarce because it's divisible. And I asked him, if I had 100 pennies or $1, do I have more or less money? It's the same thing. It's divisible, right? You can just chop it up. And he kind of shook his head, and I said, okay, we bake one pizza, we put it in the oven, we take it out, and we cut it in 8 pieces. Now I cut it in 16. Do I have more pizza? Do I feed more people? The answer is no. And so that's when it comes to divisible, Bitcoin can be, whatever denomination that you need instantly versus,
and that was, not to interrupt you, but that was one of our questions from a different listener that said, how much can you get started with? Because they're looking at the price of Bitcoin thinking, okay, I need to make a $90,000 investment at this point.
Yeah. So there's 100 million sats in Bitcoin, but you can buy $5 worth of Bitcoin. Okay. So the company that I work for, Swan, we started out very novelly in 2020 of just being a dollar cost average platform, meaning save into this every day, every week, every month. As you get paid or as you have excess cash flow, save into the asset. And that's looked really, really strong for a lot of people.
It's a great way to do it because you're not just sitting on the sidelines worrying about, am I buying at a high point, a low point, trying to time the market. You're just thinking, hey,
Absolutely.
let's just get the execution down, and then you don't have to worry about the price.
And people see like, hey, Bitcoin's up 100 and whatever percent this year. I can't buy it right now. You have to come to terms with, okay, you make that decision saying, what are my alternatives? It's not just Bitcoin in a vacuum. Okay, well, I can own tech stocks. I can own real estate. I can own gold. I can own silver. I can own whatever, or I can own Bitcoin. Like, which one today, if I have to redo my allocation or if I have to pick an asset, would I choose what I have today? If the answer is no, then you have to go make that decision.
Yeah.
And yeah, I think it is really hard for human psychology to go buy the asset that's performing really well, because we're always told you buy low and sell high, right? Like, it's not, it just hurts our brain to think like, oh, I'm going to buy it at an all-time high. Typically when Bitcoin moves, and we can get into this later on, like all-time highs, like that can happen over time. And there's typically, historically at least, been somewhat of a cycle with Bitcoin. But I don't want to get off of the characteristics of money because we were right there.
Yeah. Yeah.
Um, verifiable, I think, is important. So you think about like, how do I verify if this is real currency or fake currency? Like gold, there's like a way for you to actually like test to make sure it's not, copper inside with, a gold plating.
Yeah.
So you verify that with technology and software, right? I'm not going to, raise my hand and say I'm the engineer on the back end, but you can run your own Bitcoin node of all Bitcoin transactions since back to 2009. You can verify all your own transactions, and it'll cost you $300 or $400 in a weekend. And it's not hard to do. A lot of the wallet softwares or, different providers in the industry, they do it for you and they obfuscate that in the back end. But if you want to do it yourself, you absolutely can. And I think that's important.
Yeah.
It's storable. It doesn't expire. There's no like expiration date, like the gallon of milk in your fridge, right? You can hold it for 10 years, 20 years, 100 years. It's going to be there. Fungible. There's no Bitcoin that's better than other Bitcoin. There's not colored Bitcoin, which was a thing way back in the day where people were trying to think like, oh, this cool Bitcoin, like one sat is one sat. It doesn't make it any more unique. Same way
Sure.
a dollar bill in your pocket is the same as a dollar bill in my pocket.
Gotcha. Okay.
The recognizability of it, of just having the interoperability of Bitcoin, that I think is important, where, if you're in South Africa, you're in Australia, you're in Japan, you're in the US, like you can all be on the same system. There's no currency exchange. You don't have to lose half your value switching from
Right.
one currency to another. Like, it's just very interoperable. And I think that's really, really helpful as well. And so, not sure if I missed
Well,
any.
I think and maybe the last one, I've heard you talk about the track record of Bitcoin. And this is an interesting way to frame this, because some people say, well, Bitcoin's been around for what, roughly 15 or so years.
Yep.
The stock market's been around for much, much longer than that. But I was surprised to hear that Bitcoin has actually traded more hours than our stock market, right?
Correct. Yeah. So the S&P index started in the 70s. One of the things, again, coming from my traditional roots, there's a lot of context and knowledge of just digging into how did the S&P 500 get created? Well, they wanted to create it, and it's market cap weighted. So for people that don't know, like Apple stock is going to be a bigger weighting in the index because it is a bigger market cap. It's a bigger company than, let's say, Isaiah's, excavating company or something that's publicly traded, because I'm a smaller company. But the reason they chose that versus just an equal weight was because they didn't have the technical chops to make it happen. They were like, oh, this is the easiest way in the 70s with math to make this index work. Well,
Yeah.
yes, it only trades, during the week, a subset of hours. Bitcoin comes along in 2009 and trades 24/7, 365. So if you look at the hours traded, yes, Bitcoin has exceeded that, and it's been far, far, far greater. And I push back on my peers, and, to you or anyone else that's from an advisor perspective, it's like the history of trading in 1980 or 1970. Sure, that history is important. It's interesting, but is the world the same as it was in the 70s or 80s? Like
Yeah,
just the
right.
way
It's
trades are
drastically
done,
different.
the electronics, the high frequency trading, like there's so many things that are so different. It's really hard for me to put a ton of merit in the history of hundreds of years of this and that. And it's like, well, it makes you feel good, but in reality, the world is so different. It changed a lot in the great financial crisis. It changed a lot in, 2020 with COVID and with stimulus, and the way that just monetary policy is done in the United States. It's not the same world. And
Right.
so Bitcoin's been around and trades and is globally liquid 24/7, that you can actually see and react to things that are happening around the globe, which the regular market, the stock market, the S&P 500 doesn't. Like, it still does, but there are circuit breakers in the S&P 500, as you know. Like, if you wake up and the market's down a lot, it'll just like halt trading.
Yeah.
Bitcoin doesn't have a halt trading. It'll just go down until it finds a spot that it quits going down, right? And so to me, it's like that is actually a more free and open market
Yeah, true.
than something that is saying, well, hey, there's too much volatility. We got to stop this. We want to smooth this over, right? So those are kind of the thoughts there. But yeah, the first time that I heard the hours thing, I was like, wow, that really blew my mind.
Yeah. Yeah, that is interesting. And I think the fact that Bitcoin can go through those cycles of going down and then recovering, um, you could look at that as more of a benefit than a bug because it's showing its durable, it's showing its resilience in those moments too.
Yeah. So great example is,
Yeah.
yeah, going through COVID, right? You saw so many things trade really down, really hard. Bitcoin was one of
Yeah.
those, and
Yeah.
it reacted very strongly when new dollars were created and printed, and injected in the environment
Yeah.
and into the market. And there's a really good study done by Lynn Alden and Sam Callahan about Bitcoin and liquidity. So Lynn Alden, macro economist, Sam Callahan, similar. Like they both are very big brain, smart folks that I've learned a ton from. But they wrote about basically when you create new units. So think about inflation, right? We create more dollars for the same amount of goods. Prices have to go
Right.
up. We live in a credit-based economy, which for folks is like we have to continue to stimulate and increase the dollars in circulation. It's like this. Think of it like an engine that has a little leak, but you have to keep pouring oil in the top, right? We got to keep it coming in because we don't want the motor to seize up. So we just have to keep putting more oil in. And Bitcoin with new liquidity or new dollars coming in is the most responsive to that. So it's like this, it reacts higher than tech stocks, than gold, than bonds. Like, it's going to react in either an up or down fashion when
Yeah.
we put new money in the system or try to take it out.
Well, that's kind of leads right into the next question I had for you was, would you consider Bitcoin to be, how would you consider it to be correlated to the market? And just for our audience, essentially if something is positively correlated, it tends to move in the same direction. If it's negatively correlated, it goes the opposite direction. And if it's not correlated at all, it entirely has different variables than the market. So where would you consider it along along those options?
It's going to be uncorrelated. A lot of people will say it's just a very like it's a tech trade. It's a tech trade. I've heard that a lot from advisors. Well, it just does what the NASDAQ, the QQQs do, and
Yeah.
it's just going to react to that. And I looked at correlation, so kind of running running the numbers, right, which is what I encourage all folks to do. Just run the numbers, let the math speak for itself. And Bitcoin can be correlated at times. So again, in those moments where it's basically like everyone's panicked, typically everything correlation wise goes to one. Everything moves in kind of the same way. If anything's
Okay.
considered risky, it's going to all get sold off. If something is like really safe, cash, for example, in that period, like people are going to rush to that safe thing. And so Bitcoin will do that. And so I would consider Bitcoin to be a risk asset today. Most people are going to trade it like a risk asset. So it's going to react similarly and be volatile, just like kind of your stock portion of a portfolio. That
Yeah.
is traditionally how it's going to trade. But if you look at it over a longer period of time, it does provide a differentiated return stream. If you are looking to add, like, I want to do something that does this and this and this, it helps in a more diversified, broader portfolio because it is not correlated. Its
Okay.
return stream is unique and it is different. There's going to be periods of time, though, just like with owning any kind of equities, whether you own tech stocks or utilities, they might all sell off at the same time because they're afraid of the world's going to end, even though the world likely is not
Sure.
going to end. And if it does end, you're not going to need those stocks anyways, right? Like, so that's always the thing that's interesting. But it trades like a risk on asset. But the unique thing with Bitcoin is because it is a bearer asset, which means that you can hold it yourself. It will, over time, trade as a risk off asset because it
Okay.
doesn't have counterparty risk. And that's really what happened in 2008 was all these people that had different counterparties that had all these different trades on that didn't know how structurally screwed up they were, to put it in nice terms. And they had all these things that happened where then they were forced sellers. Well, when A was forced to sell, then B was forced to sell. And like it just had a cascading effect where people had all these other parties that they might have done it the right way, but they were impacted by someone else.
Sure.
Bitcoin, you don't have that, because if you hold your own Bitcoin, which you can do because it's a bearer asset, you then don't have any risk of someone else doing something. Your Bitcoin is yours. The dollar
Right.
value will fluctuate, but that's it, right? You're not at risk of having and being forced to sell it as long as you don't have leverage or something else on that
Right.
position.
Right. Yeah, that's interesting. That kind of leads in, I guess, to another listener question was, I think this one's maybe a tough one to answer because everybody's portfolio is going to look different. But if you are you viewing it as a separate asset class where traditionally we have kind of stocks, bonds, cash? Would we just add another asset class, stocks, bonds, cash, Bitcoin?
Yeah, I think so.
Yeah.
That's the way that I would look at it.
So the
And
follow up, I guess maybe it's harder to answer this one of what
what's
percentage of
the
the
allocation?
portfolio is supposed to look like? Is it
Yeah, I have a good answer, which the first one is I gave up the investment recommendation stuff, right? A little bit
fair
ago.
enough?
Um, but with that, what I can say is I don't know what the right allocation is for someone, but I know exactly what the wrong one is, and that's zero. If you own
Okay.
0% of your allocation to Bitcoin, I think that's wrong. I don't care how old you are. I don't care how young you are. You need some Bitcoin because of it provides a differentiated return stream. It gives you some growth of purchasing power, which is why anyone wants to invest, right? If you could just hold
Mhm.
dollars and it always would
Yeah.
buy you the same amount of stuff, you wouldn't need to invest. And so
Yeah.
we invest because we know that our dollar loses value. And so it's going to allow you to continue to purchase the goods and services that you want. And so for me, it's like that allocation range. That's where someone like you or an advisor that knows their situation, knows kind of the constraints, the unique things going on in their life can say like, hey, I think the right allocation is X%. I can't say that broad based on a podcast and be like,
Right.
well, it's 10% and it's got to be 10%. It's like that could be way too low for someone or it could be way too high.
Well, and as soon as you start at 10%, what happens if it's really doing
When
well
you, yeah, when you rebalance.
and then it's a third of your portfolio? Yeah, I mean, then do you rebalance or do you hold on and just accept a bigger piece of your portfolio is invested in Bitcoin? So
Yep.
the
And
percentage
if
is
you,
not going to be a fixed rate either.
yeah, and if you don't rebalance, Bitcoin will eventually, in my opinion, become, a huge part of your portfolio, if not all of it at some point as things get repriced in Bitcoin terms.
Yeah, that's interesting. That's an interesting way to think about it. So I guess if it does keep going up and obviously it's not a smooth ride up. It has its um, bumpy ride that direction, but if we kind of see it go up and to the right and continue to go up in value, when people use those funds to buy things or say retirement, how is Bitcoin taxed? Is that depending on how you hold it?
It's going to be taxed at capital gains rates. So it's going to be treated similar to what other investment assets would be today. That could change, right? Always subject to change, but you can own Bitcoin in a traditional IRA or a Roth IRA. We do that at Swan for
Okay.
folks where you get real Bitcoin exposure, but you can own it in a brokerage account or a taxable account. One nice thing about Bitcoin is it doesn't have cash flow, which a lot of times people will critique, right? Well, it doesn't spit off any cash flow, and I don't buy things that don't give me cash flow. Well, in a taxable account, if I buy and hold Bitcoin for 10, 15, 20 years, it's really tax efficient because it's accrued purchasing power, but I paid
Yeah.
zero tax. So it can be really, really powerful for people
Right.
just as a savings mechanism to accrue purchasing power without having any sort of tax drag on that. So I think that's an
Yeah,
interesting
that's
way to frame
interesting. I
it
think
too.
people often misunderstand like dividends and whatnot,
Yeah,
and they
dividends are
think
great.
it's,
Have a really good brand.
yeah, I mean, you can just reinvest the dividends and increase the value of the stock. And it doesn't really matter whether you're receiving dividends or not in a lot of ways, but
Yeah,
that's kind of
buybacks are
going in
better
a
than
different
dividends.
direction.
Yep. Yeah. Um,
I, I was just going to say, I kind of have a funny story with Bitcoin because I told you before we hit record that um, I guess politically, I'd identify more as like a libertarian, so I can make equally both sides a little upset with me. So
that's
when
good.
I say that, it's perfect because then nobody agrees with me. So, but back in, I think it was 2017, I was like, I love this idea, I love this concept, but I didn't really know how to go about investing in it. So my way of investing in it was I went to Amazon. I bought a T-shirt, a Bitcoin T-shirt. So instead of buying Bitcoin at like 12,000, I have a T-shirt to show for it.
Yeah. Well, it's
So
never too late. And I think that's also one of the things that people will hear, as we joked earlier, like, Bitcoin's at an all-time high. Obviously, I missed the
yeah,
boat. Like, well, that was great for people that were early, but I'm not going to be able to to own it. And I don't know if there's a question there that, wants to get into that, but I can
Yeah, absolutely. That
talk
was one of
about
the
not being too
questions
late.
is like, hey, have I missed the boat? Because, but I think not to answer for you, but people say that about the stock market too. We look to do Roth conversions and stuff like that. And they say, well, should we wait until the market comes back down? But the market's constantly setting new highs. It's not like we're going to look back 10 years from now, in most cases at least, and say that the market went the other direction and we were glad that we waited to get in.
Mm-hmm.
Um, if you're on the sideline, whether it's for the stock market or Bitcoin, my opinion is you're probably going to be on the sideline most of your life.
Yeah. And it goes back to a little bit of just the way that the current monetary system is set up, right? I view the stock market as a national security risk. I do, because there's a lot of baby boomers that are retiring every day. They have a lot of wealth that they need to live on. And so if the market would get a haircut of 30, 40, 50% and be sustained, like it just resets at that level, massive issues in our country, massive issues. And so the idea is you have to support that. And so by creating new money and inflating asset prices, that helps make sure that they can, go through. And so if you already own your assets, that's a good spot to be in, right? It's awesome. If you already own the stuff that you want, you have the house, you have the savings, like inflation in an inflationary environment is good for you. It's not necessarily a bad thing. If you're trying to accumulate, so for a younger generation, really tricky. So that to me is a big thing to consider and think about. But yeah, you're not too late to Bitcoin. And there's a really good chart that I've shared in different presentations, but I'll kind of talk through it. But it's thinking about what's Bitcoin's total addressable market. So if I'm an investor and I'm a VC investor, let's say, and I'm really smart, I'm going to go out there and say, I want to invest in companies or in ideas that have a lot of mass market adoption. A lot of people are going to want this thing. And as I kind of alluded to earlier, money, if it's 1/2 of every transaction, is impactful to every single human. So it's probably a pretty big market. Right. Store of value only. So if we just think about Bitcoin as a store of value, not as money, just as, an asset that I can own. Today we have store of value of gold, cars, fine art, stock market, real estate, bonds, and just broader money, right? Just people holding cash or other currency. Real estate's the biggest store of value asset in the world. And I would say in the United States, it's a huge asset that people store a ton of wealth in, whether it's their home or investment real estate. And because the tax laws are positive, right? And you can also borrow money really cheaply, or at least used to, right? With a mortgage, and go buy this asset, and it'll go up through inflation, but your payment, if it's a fixed rate, will, eventually become less and less impactful to you as an individual. So if I look at gold, cars, fine art, stock market, real estate, bonds, money, it's about 900 trillion in assets. 900 trillion, huge number, right? So Bitcoin today is sub 2 trillion. So pretty small.
Okay.
There was a piece done by Jesse Myers. He works for and has started a Bitcoin company called OnRamp. They do some stuff with custody with different custodians, multi-custodial. They have some advisory stuff. Anyways, he wrote an article that says, what's Bitcoin's total addressable market? And he looked at all those things and said, what does Bitcoin capture? He said it's 50% of gold, 5% of cars, 5% of fine art, 15% of the stock market, 15% of real estate, 30% of bonds, 30% of money. So not massively taking everything, right? Taking a chunk. Well, that comes out to 200 trillion.
Wow.
So that's 100x from here. So that puts Bitcoin at $10 million of Bitcoin, which is a massive number that most people are going to roll their eyes and say, that's ridiculous. How can you say that? Mm-hmm. Well, what you can do is say, okay, well, with gold, cars, fine art, stock, what percentage do you think Bitcoin eats into? If it's been the best performing asset, 12 or 11 out of the last 14 years, and let's say it continues to do well, are people going to still just turn a blind eye to that and say, no, I don't want the thing that stores value really good. Give me the second best, give me the third best, give me the fourth best thing. No, it's a self-fulfilling prophecy over time. As more people store their value, they're going to see that it works really well, and they're going to want to continue to store their value there. And I can give you another good example here in a second, but yeah, that's a huge number. That's full market adoption, let's say 200 trillion. I'm not saying we're going to get there anytime soon. This is decades down the road, but that is a huge potential market, and it's very early. 2 trillion, 200 trillion. So to think, if I'm here today and say I own 0 Bitcoin, this guy's telling me it's an all-time high, I already missed the boat. I'm telling you, absolutely not. This has a lot of room to store value. The ETF launch earlier this year was like solidifying as far as where we're at in broader adoption. I think it normalized it for advisors and normalized it for individuals to say, okay, institutions are here. They're going to allocate to this asset. And what we've seen just from the ETF launch is $20 billion has gone into the Bitcoin ETFs, $20 billion.
Wow.
That is the most successful ETF launch in history. It is massive. Gold, when it became out as GLD, their ETF, it was very, very well received, super, super, super successful. And it was in the early 2000s, I think it was 2004. It was maybe like 2 billion. Now, again, numbers are going to get bigger over time because of inflation and stuff, but gold has never had a $2 billion or $20 billion inflow year ever. And so if Bitcoin just takes out gold, it's an $800,000 asset. That's that's over an 8x from here. That's still a pretty good investment. If you get an 8x, like, people love that. That's a really good, that's a home run for lots of people. And so if you just say Bitcoin's only digital gold, it'll never do all that other stuff. It'll never take any money from stocks, bonds, money, real estate, just gold. It's an $800,000 asset. Like, that's a pretty interesting return stream and return structure there. So it's not too late. It is 100x potential to 200 trillion. It's at 2 trillion today. Would be the way I would frame that.
Interesting. All right, we are going to hit pause on this conversation with Isaiah, and we will have part 2 released in just 2 more weeks. Hopefully this has given you some things to think about if you have never explored Bitcoin as being part of your overall portfolio. Come back for part 2 as we discuss Bitcoin through a political lens. We talk about the right amount to allocate to a portfolio, or perhaps more directly, the wrong amount. I ask Isaiah for his strongest case against Bitcoin. And finally, we could not wrap up our conversation without asking Isaiah where he expects Bitcoin to go in the next 5 to 10 years. That will all be covered in part 2, so be sure to come back for that. And for all past episodes, visit our website, integrityguidance.com. Just click on the podcast tab where you can find all 76 previous episodes that we've recorded in the past. Thanks for joining, and God bless.
Thank you so much for listening and supporting this podcast. If you've enjoyed listening, we would love if you took a quick moment to leave an honest review. Of course, we're shooting for 5 stars, but if you have suggestions to improve the show, we would love to hear from you too. Just click on the podcast name, Healthy, Wealthy, and Wise Retirement Podcast, and scroll down to ratings and review. Thanks again for your support, as this helps us reach a wider audience and help even more retirees just like you. This podcast is for entertainment and informational purposes only and is not intended as a specific tax, legal, or investment advice. Lauren Sherman is a certified financial planner and co-owner of Integrity Wealth Management, an investment advisor serving retirees in search of their own healthy, wealthy, and wise retirement lifestyle.